Are you a beginner looking to invest but confused between stocks and crypto? You're not alone. Welcome to our comprehensive guide, where we'll be comparing stocks and cryptocurrency to help you make an informed decision about where to put your hard-earned money. This video is designed to break down these two investment options, exploring the advantages and disadvantages of each. We're living in an exciting time where traditional investing methods meet the digital age, and understanding how these two worlds intersect can be your key to financial success. We'll delve into what stocks are, their history, and how they work. Then we'll shift our focus to the relatively new but rapidly growing world of cryptocurrency. We'll compare these two investment avenues side by side, focusing on their potential returns, risks, and accessibility for beginners. So, sit back, relax, and let's dive into the world of investing. First up, let's talk about stocks. But what exactly are stocks? Well, in a nutshell, stocks are a type of investment that represents a share of ownership in a company. When you buy a stock, you're buying a piece of the company, a slice of the pie, if you will. You become a shareholder, and as a shareholder, you have a claim on part of the company's assets and earnings. Now, how do stocks work? Companies issue stocks to raise money. They do this through an initial public offering, or an IPO, where they sell their stocks to the public for the first time. After the IPO, these stocks can be bought and sold on various stock exchanges. As a stock owner, you can make money in two main ways: dividends and capital gains. Dividends are a portion of the company's profits that are distributed to shareholders, typically on a quarterly basis. Capital gains, on the other hand, come from selling your stocks at a higher price than what you paid for them. But here's the thing, the stock market isn't a guaranteed ticket to wealth. It's a marketplace that can fluctuate, sometimes dramatically. Prices of stocks can go up, but they can also go down. This volatility is due to a multitude of factors like economic indicators, company news, and global events. And this leads us to the risks. The value of your stocks can decrease, sometimes even to zero if the company goes bankrupt. And unlike a savings account where your deposit is insured, there's no such safety net with stocks. You could potentially lose all the money you've invested. But despite these risks, stocks have proven to be a reliable way to grow wealth over the long term. They offer the potential for high returns, especially when compared to more conservative investments like bonds or savings accounts. So that's the stock market for you. A place of potential profit, but also potential loss. Now, let's shift gears and talk about cryptocurrency. But first, what is it? Cryptocurrency, often just called crypto, is a form of digital or virtual currency. Unlike traditional currencies issued by governments, cryptocurrencies are decentralized. This means they are not controlled by any central authority like a government or financial institution. They exist solely in the digital world, with no physical counterpart like coins or notes. The unique thing about cryptocurrencies is that they use cryptography for security. This makes them incredibly secure and almost impossible to counterfeit. Transactions are verified by network nodes through cryptography and recorded in a public distributed ledger called a blockchain. This level of security and transparency is one of the key advantages of cryptocurrencies. But how does cryptocurrency work? Well, let's take Bitcoin, the first and most well-known cryptocurrency, as an example. When a Bitcoin transaction is made, it's broadcasted to the entire network. Miners, those who validate and verify these transactions, collect them into blocks and add them to the blockchain. In return, they're rewarded with new Bitcoins. This process is known as mining. Cryptocurrencies offer numerous benefits. They allow for quick and cheap transactions even across borders. They give people in countries with unstable currencies an alternative way to store value, and they open up a whole new world of possibilities in the realm of decentralized finance. However, it's not all sunshine and rainbows. The crypto market is highly volatile. Prices can skyrocket one day and plummet the next. This volatility can present opportunities for high returns, but it also means the risk of loss is significant. Additionally, while the decentralization of cryptocurrencies is often seen as a benefit, it also means there's no safety net. If you lose your crypto, it's gone for good. So, cryptocurrency is a new and exciting investment frontier, but it's also fraught with risk. Now that we know what stocks and cryptocurrency are, let's compare them. When it comes to ease of use, both stocks and cryptocurrency have become increasingly user-friendly over the years. Today, many platforms offer simple interfaces that allow you to buy and sell either with just a few clicks. However, the world of cryptocurrency can still be a bit more complex, especially when you start diving into topics like blockchain technology and digital wallets. In terms of accessibility, cryptocurrency has a slight edge. You can buy cryptocurrencies from anywhere in the world, at any time of the day or night, as long as you have an internet connection. Stocks, on the other hand, are typically traded on specific exchanges during certain hours, and there may be restrictions based on your location or the type of investor you are. Now let's talk about risk. Both stocks and cryptocurrencies come with their own sets of risks. Stocks are susceptible to market volatility, economic downturns, and company-specific risks. However, they have a long history and are generally seen as a stable investment. Cryptocurrencies, while they can offer high potential returns, are notoriously volatile. Prices can swing wildly in a matter of hours, and the market is still relatively young and unpredictable, which brings us to potential returns. While stocks have traditionally provided solid returns over the long term, the explosive growth of some cryptocurrencies has resulted in astronomical gains for some investors. But remember, with great potential returns come great risks. There are no guarantees in the world of investing, and this is particularly true in the crypto market. Finally, let's consider regulation. The stock market is heavily regulated by government bodies like the Securities and Exchange Commission in the United States. These regulations are designed to protect investors and maintain the integrity of the market. On the flip side, the cryptocurrency market is still largely unregulated. This lack of regulation can result in greater opportunities, but it also means greater risk. There's less oversight and fewer protections for investors. In summary, stocks and cryptocurrency each have their own unique advantages and drawbacks. Stocks are generally more stable and regulated, offering moderate returns over the long term. They might be the better choice if you're a risk-averse investor looking for a steady growth of your capital. Cryptocurrencies, on the other hand, can offer higher potential returns and are more accessible, but they come with a higher risk level. They might be suitable for those who have a higher risk tolerance and are comfortable with the idea that they could lose their entire investment. As always, make sure to do your own research and consider your financial goals and risk tolerance before making an investment decision. So, after comparing stocks and cryptocurrency, which is a better investment for beginners? Well, as we've journeyed through the realms of stocks and cryptocurrency, we've unearthed some key points. Stocks, the time-tested investment avenue, provide a sense of stability with their history of consistent returns over the long term. They represent a share in a company's ownership, and their performance is often tied to the economy's health, which makes them somewhat predictable. On the other hand, cryptocurrency, the new kid on the block, is a digital or virtual form of currency that offers the potential for astronomical returns. However, it's a double-edged sword, as its volatility can also lead to substantial losses. Cryptocurrency's decentralized nature and the technology behind it, blockchain, are revolutionary, but they also add to its complexity. Now, which is the better investment for beginners? The answer isn't as straightforward as you might think. It's not about choosing one over the other, but rather about understanding your own risk tolerance, investment goals, and comprehension of the market. If you're someone who prefers stability and is investing with a long-term perspective, stocks might be your go-to. However, if you're comfortable with high-risk, high-reward scenarios and have a knack for understanding complex technologies, cryptocurrency could be an exciting avenue to explore. But remember, be it stocks or cryptocurrency, it's crucial to do your own research. Understand the company or the technology you're investing in, keep yourself updated with market trends, and most importantly, consider seeking advice from a financial advisor. They can provide personalized guidance tailored to your financial situation and goals. In the end, investing isn't just about making money. It's about growing your wealth strategically and responsibly. It's about making your money work for you. So while the world of investing might seem daunting at first, with knowledge, careful planning, and a dash of courage, it can become an exciting journey of financial growth. Remember, investing is not a guarantee of making money, but with knowledge and careful planning, it's possible to grow your wealth. Thanks for watching.